Greetings. Today is Friday, June 28. Let's discuss the chart for the euro and the pound sterling and try to predict their further moves. The charts show us that both the euro and the pound sterling made efforts to gain ground yesterday. Indeed, the buyers had good luck in the first half of the day. The data on private sector loans and a consumer sentiment index in the Eurozone notched the forecast. This mitigated pressure on the euro and enabled the single currency to have a modest upward correction. In the second half of the day, the US dollar went through sell-offs because of a decrease in pending home sales and a sharp rise in both initial and continuing unemployment claims in the US. On the plus side, the US GDP was slightly upgraded. After sell-offs, demand for the greenback revived. Meanwhile, the euro-dollar pair is drifting down to the lower border of the trend channel, which coincides with the month 1 lows. Today, the sellers are likely to try to update the monthly lows at the end of the June. Still, the odds for a sell-off of the euro today are about zero. Now I want to remind you about macroeconomic data. The UK GDP data is already available. GDP for first quarter was better than estimated. The British pound did not give a strong response. The market will shift focus to comments by third policymakers later today. Besides, traders will take notice of personal income and spending. The report of crucial importance today is the PCE price index, known as the Federal Reserve's preferred parameter of inflation. The index is expected to slip to 2.6% in May from 2.7% on year. If the forecast comes true, the US Fed will not feel obligated to stick to hawkish monetary policy. However, if the annual rate actually grew or did not change from April, the US dollar will assert its strength because the market won't rely on the Fed's dovish policy decision this autumn. Now let's see what's happening on the 1-hour chart of the euro-dollar pair. I've spotted resistance at 1.0710 and 1.0735. It makes sense to take these levels into account when opening short positions. If the price is unable to settle above 0710, it will be a good signal to sell. Large support is seen at 1.0669. I will play long positions there in case of a false breakout. If there is no active selling at 1.0700, I will postpone opening short positions until 0735 or 0761 during a rebound. My trading plan will depend on the PCE price index. A breakout at 1.0669 after the strong US PCE index and personal spending data will enable more sell-offs of the euro. I foresee downward targets at 1.0642 and perhaps 1.0601. If so, I will consider long positions during a dip, bearing in mind a 20-25 pips upward correction. I will open long positions from 1.0642 or 0669 on the conditions of a false breakout. As for the pound sterling, the buyers did their best yesterday, trying to stall the bearish trend which has been going for the whole week. The bulls are having trouble. The main task for today is to defend 1.2613, a 1-month low and key support. If the instrument makes a false breakout there, I will get a good point to open long positions. If the price climbs above 26.42 after soft US inflation data, we will have a good reason to go long, with targets at 1.2671 or even 26.99. If the price rises that high, I will plan short positions during a rebound, bearing in mind a 20-23 pips downward move. Besides, we could go short at 1.2672 and 1.2654 on the conditions of a false breakout. If the bears are not active at 26.13 because the PCE price index shows high inflationary pressure, I could sell the pound with targets at 1.2583 and 1.2550. If so, I will consider long positions immediately during a dip, setting a take profit 25-30 pips up. Long positions against the trend will be possible only on the condition of a false breakout. Good luck and have a nice weekend.